Okay, so let's share our screen. We'll be sharing this. Okay, I believe you can see my screen right now. Can you see my screen? All right. Awesome. So yesterday we looked at a couple of charts. Okay, not a couple of charts. I think we looked at Euro USD, looked at AUD card, and looked at card JPY yesterday. I can't remember the fourth one. And what we're looking at is Euro USD coming up to test this support. I mean this resistance right up here. Okay. However, we saw a beautiful channel. Every channel going up, so we're expecting probably the market to come up, and then get to this place. However, the resistance here, I told us that the first point of obstruction I might have to the move of the market is this resistance right here. That this is what we drew yesterday, and when market got to this place, what happened? Market dropped. Now, it now dropped and broke this channel. It broke this channel. And I told you that most of the time that it's always best that whenever you have a breakout, that you wait for a retest. And beautifully, market broke out and came back for a retest. Now, this 4-hour candle will close by 10 p.m. and it's looking like something I want to form an armor. Or can see it even better on 1 hour. If you were trading out of 1 hour, you will have entered this trade because we can see an inverted armor right here, or I call it a pin bar, okay, and then with the confirmation candle after it, which is bearish. So which means this guy has broken out from this channel, has come to retest it, and the bearish move has the bearish move that's begun. Okay, you can see that we're in an uptrend before, and an uptrend forms higher highs and higher lows, and then you can see higher high, higher low, higher high, higher low, higher high. However, that pattern was disrupted when it broke below, and they will now have a lower low. You can see that a lower low right here. I have a lower low right here. Okay. So now I have a lower low, which means that's scattered the uptrend pattern. The uptrend pattern is no more. On a normal day, we're supposed to have a higher low and then continues up. But now this pattern that's going up has been disrupted, and then we have the market going down. So the orientation has changed. But if we're trading out of 15 minutes, I'm sure we probably may be entering this trade around now for itself. Okay, probably be entering this trade around now for itself. Market has come back, touched the channel, the lower trend of the channel that has been rejected from there. You can see all bearish. Before we're having bullish, bearish, but here all bearish rejection. Right, so we already have a rejection. And anybody that wants to trade Euro USD should be looking at a probable sell. If this guy finishes bearish, that would be a confirmation for a bearish move. All right. So we also looked at AUD card, and I told us about card. That the oil market affects card. Whatever happens to oil, you will see it affecting the card pair. We see it affecting the card pair. So this, we looked at card, and what happened to oil between yesterday and today. This is the oil chart. You can see between yesterday and today, the oil chart dropped. Oil dropped between yesterday and today. In fact, it has been dropping for the past 2 days now. You can see throughout. oil has been dropping. So that weakened the Canadian dollar. So the Canadian dollar is very weak. Oil has gone back down to around $20. We were thinking that now that it has gone to like 29.30, probably it's going to be good for economy. I'm telling you what is happening to oil is not good for Nigerian economy at all. However, that's what we can see. Oil is still very, 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 very poor. Very poor. Price is low. It's not looking like it wants to go up, and that is affecting the Canadian dollar. The Canadian dollar, you can see, AUD card has been bullish. For the main period of it. It was trying to come be strong, but because of oil, it has to go up again. Okay, that's AUD card. But where card is the base currency, where we have card JPY. See what happened. See what happened right now. Market just tanked. Market just tanked on card JPY. Market just tanked. Okay. Throughout today, it just started tanking. Because oil was dropping. Once oil is dropping, I can bring up the oil. This broker has oil here. So let me just bring up the oil on this chart. Where is oil? Oil. Okay, that's US oil. You can see this crude oil. So we have the chart right here. You can see oil dropped from beginning of the day. Now it's kind of trying to pick up. So, and once you see that oil is picking up, there's a probability that CAD will soon start picking up. As you can see too, it's kind of trying to pick up also. So there is this direct proportion of oil and CAD JPY. And then for US dollars, you can see that US dollars, the US index strengthening. So throughout today, we had a very strong US move. US dollar was very strong today because the US index also gained strength. US index also gained strength. We have US index here. Yeah, here we have US 30. Well, okay. Yeah, this is the US index. Okay. Please, all these things I'm showing you, they are very important. You need to probably put them down. We have US index. There are some brokers that don't have US index. You can see how strong US index was all throughout today. Is around the evening I started adjusting. This is more like a retracement, but picked up again. So anything US dollar, you have to just be fine. So from here you can see that Euro USD, because US index is strong, Euro USD will have to be selling. Okay, you can see, and Euro USD was selling because USD is strong. USD, and then you know CAD is weak, so you should know that automatically USD CAD will be what? Buying. I've never checked the chart. I know that USD CAD will be buying because you can see USD CAD, USD is strong, CAD is very weak. And see what happened all throughout the day. All throughout the day. Unfortunately, I got to find this out. You know, I was sleepy throughout in the morning, so I got to find it out late. I'll probably been able to take trade on this particular stuff. Okay. Now, if your broker doesn't have, well, this is Infinite. So if you guys we are with our broker, you should be able to get this chart yourself. Okay, it's on our chart, USDX, that's the USD index. So whatever, this is what tells you exactly what that is. Purely US index, as in US dollar. So once you know US dollar is strengthening, you see it there. If US dollar is weakening, you see it here. So we have started fundamentals. So this is probably the introduction to fundamental analysis, okay? Because we are talking. Look, this is just a chart showing the economy of the US, okay? US index is not trading against. This is not trading currency to currency. This is simply the US dollar index. US dollar index. Okay. For if you have a broker that don't have it, you can always go to trading view. Trading view. What's this? Trading view should remove all this. Yeah. Sorry. Okay, let's just continue once I know to get this done. Okay. Now, TradingView is another platform that you can actually analyze your chart. It's also like is an alternative to MT4, but many brokers don't use it. There are few brokers, top brokers that use TradingView that can trade directly, but many brokers cannot trade directly on TradingView. Okay, so but at least you can also analyze the charts from there. I can see different currency pairs also from TradingView. Okay, so so this is TradingView. So here you can see different currency pairs. So you can put US. If you want US index, you can see it right there. Just put US dollar. Okay, call it that's just one US dollar currency index. Call it DXY here. Dollar currency index. Okay, so same chart. But our broker has it, so you don't need to have to come to TradingView before you see US index. Good enough, we have it on an MT4. Okay, so that's that. Now, before we go to fundamental analysis, I wanted to bring in the concept of indicators. When does indicators come in? When does indicators come in to our trading? Now, indicators, I want you to understand that they are confirmatory tools. They are confirmatory tools. They're supposed to be confirmatory tools, okay, to ascertain that what you have analyzed, okay, is probably you are in the right direction. You understand? Just confirm for you. Though some people trade directly through what indicators show them, but I've discovered that most of the time indicators follow the market. Market will have moved before indicator give you its own. They follow what is happening in the market. So market will have done its move before indicator actually show you its own readings and all that. Okay, how do you get indicators? If you go to insert on your MT4, you see indicators there. There are a lot of indicators. These ones are default indicators on the MetaTrader 4. However, you can also install indicators by yourself. Okay, many people have made different indicators that suits their own purpose, their trading style. Okay, you can get millions of indicators on the internet, depending on what it does. Okay, so you can get indicators like here. Go to insert, see indicators. Okay, and they can choose one indicator. Let's look at. We have trend indicators. Trend indicators simply mean direction. Shows you direction. Okay, direction. That's trend indicators. We have oscillators. Oscillators show you the swings up and down. You know, kind of up and down, the swings in the market. Like, okay, these are what do I call swing? Move up, move down, move up, move down. Okay, those are oscillators that also show you swings in the market. So we also have volume. We have volume indicators. Volume indicators tells you the number of traders trading per time. There are times, for example, when we are in the morning stroke afternoon, there's a lot of people online. People in the US are trading, people in London are trading. Okay, but in the evening, people in US, they are also getting to the evening. We are going to sleep. People in US too, they're already like, I think they're about 6 hours. They're in the afternoon, so they're getting towards evening. By midnight, you see that the volume is quiet. Many people have gone to sleep. Even US people have gone to sleep. But it will only be the Asians, the Chinese people that will be in the market. So at that time, you see that there will be a low volume, okay, in the market. And volume also depends on how much of cash, how much of money is being traded per time in the forex market. Okay, so that's volume. Then we have Bill Williams. Bill Williams is a renowned forex trader. So he made his own indicator, which was not accepted by MetaTrader 4. They also, so it's not a particular group, but he made this as an oscillator, alligator as a trend. Alligator is a trend, but this is an oscillator. So yeah, it's not a group on his own, but it's somebody called the Williams. I think that's here alive. You can check online. You can check. I think that's the website also. Okay, and then we have custom indicators. Custom indicators are also indicators that people made. That if you download this and you install it on your MetaTrader 4, it will be showing up around this place. Okay, so how do you use indicators? Let's look at trend indicator, for example. I go to indicator. We're going to look at moving average. Moving average is the most popular trend indicator in the market. Moving average. Okay, I want you to follow me as I set it up. Moving average. Okay, you can see we have period. Period simply means the number of candles that the moving average is considered for it to plot, what the line that is plotting on the chart. Okay, so and then we have different ones: exponential, we have simple, we have smoothed, we have linear weight. You can also change the colors here and decide what color you want. Okay, now apply to close. Close means that you want the indicator to plot whatever you want to plot after the close of every candle. Okay, then you can decide, okay, before candles open, or when there's a high, the highs of the candle. By now you should know close, high, and low of a candle. Okay, and we learned that 2 days ago, I guess. So we have the high of the candle. Let me just remind us quickly. This is high of a candle. This is a bullish candle. Definitely it closed at the top, and then it opened at the bottom, and then we have the low of the candle. Just to remind you. And if it's a bearish candle, we have the high here, but we have the what? Open at the top, it closed at the bottom. That's why it's a bearish candle. And here is the low. Alright, so let's go back to the indicator moving average. So we have moving average. I said 20 period moving average. So I put it on. You can see that moving average on my chart. So most of the time some people do use this moving average, to determine when to probably exit their trade. I want to change the color to make it clearer. It doesn't matter, I can use any color. Okay, can even make it bolder. Let's go in it again. So this is 20 period moving average. You can see it. Because some people trade this, they use it as a confirmation of their trade. For example, if they entered the trade, around this place, okay, maybe they entered around this place after seeing that the market has been integrated from here. Once it comes under the moving average, they hold their trade. They hold their trade until the trade crosses back above the moving average. They would not exit the trade. Some people use moving averages like that. Okay, some people use moving averages like that. But you can see it's just a confirmation. You can see market already turned even before the moving average turned. Okay, but if you're waiting for moving average to turn, you may have missed, your earlier entry of the market. Okay, so doesn't mean you cannot put more moving averages on your chart. You can also add another one. Some people use 2 different moving averages at a time, and that also gives a kind of trading system. Some people do that. Okay, you can see this is 50 period moving average, 20 period moving average. Some people, when 20 crosses 50, they want to sell. When 20 crosses below 50, they want to sell. When 50 crosses, when 20 crosses above 50 they want to buy. They also do that. But like I said, don't base your trading basically on that. You can see 20 crossed above 50, and then you can see that market was trending up. So it's actually a trend indicator. You can see trend. It's showing the trend of the market. It shows the trend of the market. Okay. Now let's look at oscillator. Oscillators shows you the swing high and swing low, the swings of the market, and we have different ones. The popular ones is RSI, Relative Strength Index, RSI, MACD. Those are the popular ones that people use. In fact, basically most traders love these two, the MACD and the RSI. So let's start with the RSI. Okay, RSI. We change color. So this is a period. You can change the period as you want, like we change in the moving average. Then put it. You can see the RSI. RSI have levels. This is 70. This is 30. You can edit it. I right click. I click on its properties. Can edit it. The levels. I can change the color maybe to something blue so that it can be clearer. You can change the style to straight line. I can even make it heavy line. Okay. Click OK. You can see the line very clear now. So what some people do is when price goes above 70. Now I can see when RSI was going up, what happened to price? Price was also going up. Okay, price was going up. That means it's showing you the price is going up. And then when it reversed, you can see RSI is also reversing. So it's showing you the up and down. That's the swing of the market. You can see this swing up, RSI also swings up. Then when it's going down, that's the RSI is also dropping. Okay, and some people also trade out of this place. They want to trade when they want to sell whenever RSI is on a higher level. That means probably above 70 level. They want to only be looking for a sell trade. And when market is below 30, they want to be looking for only a buy trade. Okay, that's one way the people use RSI. However, I personally don't. When I first started, I tried to use it. Really depend on RSI, but in fact, I don't really use it anymore. But it's not a bad. It's a very, 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 very good RSI. Sorry, good indicator that people use. Okay, but there are methods that people apply to use the RSI. Some people can prefer their levels to be 80-10, 80-10, 80-10. Sorry, 80-20. 80-20. If I ever want to use RSI, I will be using 80-20 and not 70-30. It's 80-20. So if market comes above 80, they say that the market is overbought. Is what? Please put it in the chat box. Overbought. That they have bought the market too much. Let me see if I can get a point where the RSI went above 80. Okay, right here. They said the market, they bought it too much. So it went above 80 right here. They said they bought it too much. So when market is overbought, people are looking for selling opportunities. So right here, once market got to this point, people are already looking to sell this market. But you can see that this market never sold until around this place. Okay, until around this place. So if I want to use this RSI, once I see market is overbought, I know that there's going to be a pause very soon. To me, it's not an indication for me to sell the market. It's an indication for me to look at when will the market want to reverse and what is the pattern that is forming. And you can see right here, this pattern was it formed the ascending wedge, bullish ascending wedge. Okay, so while this was going up, this was going down. While this was going up, while I think I need to put off this notification. I'm so sorry. Notification. It's going to really distract us. Okay. Yeah. I did not say divergence because Abiola said overbought. Okay. All right. So let's get to that point. Okay, let's get to that point. So when you see that the market is going up and the indicator is going down, it's showing that very soon the market is going to go in line with the indicator very soon. Okay. Also, the way people use this is that whenever there's an overbought situation and you see that the RSI is trending down, there are two peaks, is going down and price is going up, and that's what Mr. Biode is trying to talk about. When you see things like this, it is an indication that the market is going to reverse. Okay, when you see that the RSI or the indicator is going down and price is going up, we call it divergence. There's a divergence of price and indicator. There's a divergence of price and indicator. It simply means that the market is going to go in line. It's going to go in the direction of the indicator pretty soon. And you can see if you actually measured your stop like this, if you had looked at your if you had also looked at the market, something like this, okay, it's forming a ascending stop, and then you now see this big bearish engulfing candle. This candle engulfs so many candles. Okay, these already, some people enter the market after this engulfing candle. Number one, because there is divergence. Number two, because this engulfing candle is a reversal candlestick. This bearish engulfing candle is a reversal candlestick. So people enter this market around this place and then put their stop loss above this place. And you can see, even though the market went sideways, they entered to profit for a long time. Eventually, it drops. Okay, divergence is a very powerful way of knowing when the market is going to what? It's going to change. Let's see if we see another example there. You can see also we have the divergence right here. The price was going down, but what happened to RSI? RSI was going up. Okay, and what happened here? Price went up. So divergence is very powerful, very powerful. Let's see another one. Here and here. Let's see where is higher. Which is higher here? This is so this is a form of divergence also. Price was going up, indicator was going down, or even almost equal, but it's also divergence. Okay, it's also divergence. This is divergence, and what happened there? Price stands. So divergence is a powerful way of using the RSI. In fact, it's the only reason why I will use RSI. Whenever I guess there will be a divergence, I just put the RSI to check. Once I confirm that there is a divergence in what I'm looking at, I remove the RSI, I take my trade. Okay? You can see this. This guy is going up here. What is price doing? Price is going down. And after that, it gave us a reversal candlestick pattern with a confirmative bullish, strong bullish move. So this confirmed that price has totally changed direction around here. Okay. So right now this guy is trending down, and price is, so everything is still in a downward move. CAD is still very weak, so other pairs are still taking advantage of CAD. Yeah. CAD is weak, JPY is strong. I can see everything is going down. All right, another example of an oscillator, very important oscillator, is MACD. Personally, I'm in a training, I'll call you back. I'm in a training, I'll call you back. Sorry, guys. Sorry. Can you still hear me? Am I still connected, please? Am I still connected, please? Can you still hear me and see my screen? So sorry. Once a call comes in, it disrupts my internet. So I probably need to maybe after this lockdown, I need to get a Wi-Fi or those universal modem. That will help you. Okay. So so let's look at MACD. That's the way. MACD. MACD simply means moving average convergence and divergence. Moving average convergence, moving average convergence divergence. Moving average convergence divergence. Okay? And this is how it looks like. You can change the color to what you want it to look like. Okay? You can see this is also a oscillating indicator. You can see market is coming down. What MACD is doing? Coming down. Market is going up. What MACD is doing? Going up. Market is coming down. MACD is coming down. It went up a bit. MACD went up a bit. Dropped. MACD dropped. Okay, MACD dropped. So is a oscillating indicator. Okay, let me remove the RSI. I just right click it, click on delete. Okay. So how do you trade? How do you trade with MACD also? Also, it's a moving average divergence convergence indicator. So you can also use moving average convergence and divergence, okay, to trade MACD. Same way. If you notice that whenever MACD crosses the zero line, you can see this 0.0 line. Okay, let me color the zero line. That's a level zero. Let's color it. Let's color it red also. Okay, so that's line 0. You can see line 0 there. If you can see line 0, please put 1 in the chat box. If you can see line 0, MACD line 0, put 1 in the chat box. If you can see line 0 on my chart, on the MACD, if you can see line 0, please put 1 in the chat box. Okay, beautiful. So this is line 0, okay? And you'll notice that once MACD bar chart, this is we have the signal line and we have the what's my phone saying? We have the main, which is the blue, and we have the signal line, which is the red. So this red line is the signal line. Okay. Whenever the signal line crosses above the 0 level, you can see that market is strongly bullish. Whenever it comes below the zero level, you can see market is strongly bearish. Okay, when market comes, when camera is very bearish, as it remains bearish all throughout, up to this point. You can see market was bearish below zero, and then when it came above zero, a bit it retraced above also, but immediately came back under zero, and then the bearish trend continued under zero. But when it came above zero, what happened? Market pushed up. When it came below zero again, market started dropping. When it goes above zero, market. So this could be confirmation once you enter, for example, if you have entered the trade right here, okay, when this market was going down, and you see that there is no more forming lower low. You can see when market was coming here, coming lower high, lower low high, lower low high, lower low. Then what did it do? It came up here, okay, from the higher high. Then it couldn't go from a lower low again, so it couldn't go lower low. Normally it's supposed to go lower low, it's going to go bearish. We'll now have a higher low, okay, and then market moved up higher high. When market was moving up to a higher high, and you're having all this, see bullish engulfing, see hammer, all this is telling you that price is going back up. And then immediately you are seeing also the MACD is following above the zero line. 20 is crossing 50, on the moving average. Okay, all these are confirmation that you are right to be what? Buying this market. So this is a good sign that if you are buying, then you are right. Okay, so they confirm the move of the market. Okay, so that's how MACD works. You can see above zero, market is bullish. Below zero, market is bearish. Above zero, market is bullish. Below zero now, you can see this guy came under. Look at this, there was a cross here. 20 came under 50, and then MACD also came lower. So what can you see? Market is dropping, and then MACD is below zero. Okay, so that's one way. The zero cross, that's one way to look at MACD. The other way to look at MACD is also looking for divergence in the market. Look at the divergence you saw here. You can see that there was a divergence when market was going up. What did MACD also do? So both MACD and RSI gave us confirmation of the divergence. Okay, MACD also had two peaks. One peak came down, came up again, two peaks going down. So this is a confirmation of what? This is a divergence also right here. Okay, so that's one way to confirm the work of MACD. You can use this thing on any time frame. You can see it on any time frame. It works on any time frame. Same principle, same way it works. Now this is just one trade. This is one strategy some people just use. Okay, you can see this is a divergence right here. MACD going up, price coming down, and then we have this head and shoulder right here. We have head here. Sorry, we have shoulder here. And then we have head here. So these are head and shoulder pattern. Okay, and then confirmation with MACD also, divergence of MACD. So this is a good confirmation that price is going up. And see what happened. Price went up. So these are ways you can use indicators to also test the market. Okay, if you look at other indicators, you just build on what these two guys, all these ones are doing. Look at the Williams just modified the MACD with awesome oscillator. That's why I also like awesome oscillator in place of MACD. It's almost the same thing. What does it do? It gives you color. When it's green, it's telling you that price is also going up. Okay, you can also adjust it, give the levels, zero level, you can color it also. So the one that suits you can use. It's just a modification of the MACD, but this time around it gives it colors, red for going down, green for going up. Okay, so it just to help those who need some more visuals to understand how the trend is moving. Okay, so awesome oscillator is a custom notification of MACD. Okay. Then there are people make different. Let me see if I can show you how to install external indicators. Okay, I'm going to get an external indicator now. And show you how to get to install it. Let me see if I can get an indicator from my system. Okay. Indicator here. Sorry, let me see. Okay, let's install currency strength meter. Currency strength meter. Now, this indicator is not on MT4, but somebody made it. They want you to know which currency is strong at a particular time, or is weak at a particular time. So once you download it, okay, you need to, of course, this is a zipped file, so I need to unzip it before I can use it. So I want to unzip, extract it. Okay. Please follow me. So where is it? Yeah, so this is it. Currency strength alert. That's an MQL4. This is how it looks like. Okay. So what we want to do is we want to install it on our chart. So what do? You go to your chart, click on file, click on open data folder. What we are doing now is how to install an external indicator into your chart. You go to file, go to open data folder, Under that, you are going to go to MQL4. Under it, you see indicators. You can see indicators. So you click on indicators. So simply you copy from your system and paste it inside this indicator window. Okay, so I go to where that file is. I copy it. Then I go to my indicator and paste it. So you can see it's right there in my indicator folder. Then I close it up. Then I'll now go to my navigation bar where you can also see your indicators right here. All the indicators aside from insert, you have the navigation window. That's this guy, a navigator, or you can say Control N, or you go to File, no View, and click on Navigator. You see all your indicators there. Okay, but if I look here, I can't see that currency stuff here, so I have to refresh it. So I right click inside that window, click on refresh. So if you close your metaphor and reopen it, it's going to bring up what you installed. But if you don't refresh, you may not see it. So let's wait for it to refresh. So let's look for it. So this is the currency alert. So it's there. Currency alert. Okay, so what do I need to do to put it on my chart? I can just drag it and drop it on the chart. Same with any other window. So drag it and drop it on the chart. I click OK. Here you are. You can see. Now it's telling me the currency that are strong and the one that are weak per time. This you will not see directly on your MT4. You will not see directly on your MT4. So here I can see that Japanese yen is the strongest currency as we are right now. You can see it's dropping. So which means Japanese yen against euro, Japanese yen against euro, for example, euro JPY will be selling. Will be selling currently. So if we go to euro JPY, you can see it's selling. It's selling currently. Wow. This is really beautiful. Look at this. Look at this. Look at the break. Look at the break. So, and that was a retest of a support area. Happy? So same thing is happening on Euro USD. In fact, Euro USD and Euro JPY is like the kind of they move alike. So you can see they move alike. On 1 hour now, we are seeing a bearish engulfing that is forming. So by the 10 o'clock, if this guy finishes bearish, it's a good trade for itself. It's a good trade for itself. It has broken this level of support and has come back to the test. And currently, JPY is in our favor, which is a strong currency. JPY is strong currently. So once the next 8 minutes, this trade is good for itself because this candle will close. In fact, the day will close by this time. Okay, so we can go for itself, and if you sell, can simply take the profit even on it about 40 pips, 40 pips something. That's about $4 if you are using 0.01. Okay, can you make about 40 pips, you know, as your first level of take profit. Okay, because this is the last support area that we are seeing, and then before you can now look at probably market coming down to the next support area. Okay, so this guy, once he finishes, can take his sell, and then so that is how you install. That's how you install. That's how you install the currency, the external indicator. Okay, I put it here. Gives me the values. Give the values. Do you have any question? Please indicate in the chat box. Indicate in the chat box. If you have a question, please kindly indicate in the chat box. Are we together? There's no question, right? Everything is clear. Okay. Put a 333 if all we have discussed is clear. Please put a 333. Put a 333. 333. Put it in the chat box if all we have discussed is clear. Awesome. Installation of the currency alert. What would this call? Installation of an external indicator that is not on the MetaTrader 4. It will be an indicator, doesn't have to be currency alert. Okay, so what we can do after we install, you can just follow, you can just check that out and check it out from the video when you get it. But putting it on the chart is very simple. You can right click and say attach the chart, or just drag and drop. For example, once alligator, you can just drag and drop it on the chart. Alligator is also moving average modified by Bill Williams. Okay, so 3 moving averages moving together, modified by Bill Williams. So this alligator indicator. Okay, so some people they trade using those alligator indicator to confirm their direction. Okay, once price is below the 3 the three moving averages moving together, you know, the sell. Once it's above, the buy. Okay, so if it is installing from my laptop, I think I explained it already. You have it on your laptop. Okay, then you go to File, open Data folder, open MQL4, open Indicators, then copy it where you downloaded it and drop and paste it inside this place. That's all. Paste it inside this place and then come to your navigation and refresh. That's all. You will see what you have installed on your chart, on your empty phone. So that's how you install it. So I think I've answered the question. Any other question, please? Any other question, please? All right. So like I told you, there are several indicators, but like I said, indicators are just confirmatory tools. They are just confirmatory tools. Okay. But I just love this pattern. Very clear reversal pattern. Very clear reversal pattern. Everything. So even if I want to confirm this now, I can actually put indicator. Let's see what MACD is saying. Let's see what MACD is saying concerning this particular oscillators MACD. You can use it here. You can also look for it here. Anywhere you can use it. So this MACD, just drop. Okay. So MACD signal line is crossing, has crossed, the main has crossed below the signal line. So it's almost going down. It wants crossing to the zero line. So some people wait. You can imagine if I'm waiting for price to go below zero line, I will not enter this trade. As I will say, the indicator is following the price. So it's lagging behind. Some people have entered already at the break of this guy. Some people will wait for the test of this level of before they go. Some people will enter. So whether you wait for a test or you enter immediately, okay. But because I'm seeing this kind of candle, can just give you a direct entry. Okay, this is a bearish engulfing candle. Once it closes like this, just waiting for a test. Even if you go to the test, it may not come above. It may not come above that candle. It may not come above that candle. Just come a bit, maybe to this place and then drop. Okay. So, but you can see on 15-minute time frame, this guy has not dropped. Probably on 5-minute time frame, on 5 minutes it has dropped below zero level already. On 5-minute time frame, it has crossed below zero level. So if I trade based on 5 minutes, I will have entered this trade when MACD came below zero level. So I'm trading on 15 minutes and I'm still waiting. So I'm trading on 30 minutes. In fact, 30 minutes has been below zero, okay, and then it's trying to increase momentum below zero. As you can see now, in this market, trying to spike down. So a new candle has formed. And see the move. See the move. See the move. Oh my. This forex is beautiful. Alright, you can see. So on 1 hour, it has been bearish all along. So it's still bearish. On 4 hours, it has been confirmed bearish since. It has been bearish. So if people have entered this trade around here, they are still holding their trade. Okay, they're still holding their trade. Alright. Finally, there's another question. Let me see the chat box. No other question. Alright, beautiful. So I want us to go over the video again. That's how indicators work. From tomorrow, we will talk about fundamental analysis, and then we'll also analyze currency pairs. From now on, we'll begin to analyze at least 1 or 2 currency pairs in every class to the end of the class. so that we'll get used and familiar to it. And also, we'll also be getting assignments to analyze currency pairs for us. Okay, so get ready for that. Get ready for that. So I want to go back to your chart, look at all the things I've been talking about, look at for patterns in the market, look at for patterns in the market, look at how the prices are reacting to patterns, and then also see, you can check out a few indicators, see how they react to the move in the market. Okay, confirming what you are seeing also. Okay, so that will be all. That will be all for today. If you love what you heard today, please put a 444. Put a 444. I invite you to the class. Put a 444 in the chat box.